Good evening, stock traders, and welcome back to Stock Traders Talk Radio. I'm your host, Stock Sumo. Thanks for joining us on another fantastic evening. Tonight's Thursday, August 30th, 2012. And one of our favorite things to do here at STT is bring our listeners the very best in exclusive CEO interviews. And tonight, we got a great follow-up. And doing tonight's interview is Cop. Cop, take it away.
Thanks, Sumo. We're here with Mr. Bill Nesbitt, President and CEO, as well as Mr. Edward Withrow III, the founder and chairman of the board of Ecologic Transportation, Inc., stock ticker EGCT. Welcome back to the show, Edward and Bill. Thanks for joining us.
I appreciate it.
Thanks,
Thanks
Cop.
for having me.
The last time you were on the show is it was extensive in detail and covered a lot of the information about the company. However, for our new members or any people that are just now tuning in, how about if we just give them an update of what EGCT does?
Well, I appreciate that, Cop, and I'll jump in for this, but we obviously do want to have Bill didn't get in on the last. He tried to, but he didn't quite make it to the offices here from the airport. But what we went over was Ecologic Transportation is a pure green environmental rent-a-car company, and one might say, well, Ted, you're not renting any cars right now. How can you be a rent-a-car company? Well, our thesis was and is we'd be better off for a lot of reasons if we look to acquire and consolidate tier 2 multi-regional in the United States car rental companies, independent car rental companies, acquire them, convert their fleets over a period of time to 100%, have the fleets composed of 100% environmentally friendly cars. And then that's who we are. I mean, I can go into a bunch of different things, but in essence, that's why we exist. And where we sit today is we have entered into a letter of intent to acquire the terms and conditions set for acquiring a Midwest-based rent-a-car company called Ace Rent-A-Car. And again, we were extremely excited on a number of points. One is that Ace is a 46-year history. It's basically a family-owned business. They've been in the family. There's two primary principals, both have been in the company together more than 25 years, and I'm sure they would say longer, but I'm going to use that figure because I don't have the exact times in the back of my head. They're headquartered in Indianapolis and Chicago, Illinois. They run an incredible reservation system with affiliates across the country. And their primary core operation is on the top end revenue is just shy of $70 million. Their primary areas of revenue generation are in the car rental, reservations, car sales, and parking. And we on above just that company, and as I said before in the last interview, and then people in private that I talked to, and I'm sure Bill will reconfirm this, the primary reason for acquiring this company is the stewardship of its management and the culture they've created, the operation they created. It's just a perfect fit for Ecologic to use as a platform to grow to what I would consider a very sizable independent car rental company. And we would like to grow in the next 3 years somewhere in the neighborhood of 350 to 450 million in revenue through both organic and acquisition. And then I talked about where we were heading at that time, and I took Bill over to the east and to China and to Hong Kong, a little stopover in Korea. And we went there to meet with a couple very large companies and some strategic investors. And I do want, in today's COP, if we could, I'd like, because the meetings went really well. We can't name I can't name both companies. We have some NDAs, and it wouldn't be prudent to do so right now. But I can say that they're Fortune 200 in size. Both.
You're stopping me before I ask you that, huh?
Yeah, so they're extraordinarily large, and because of that, we have to be quite cognizant of their or sensitive to the fact that they would like to make sure that all the T's are crossed and I's are dotted, and we're all hunky dory before their names are thrown around. But I would say they're Fortune 100 in size or Fortune 200 in size. I'm kind of at this COP. What I'd like to do is, because I was, Bill had his own view. He hadn't been to China, and he had this kind of maybe a view in his head. And when we went there, about maybe what kind of cars we would look at. We were looking at automobiles to potentially build relationships with manufacturers, just as we will here in the States and in Europe and in Japan and Korea. This just happened to be an opportunity that was presented to us from some strategic investors. So we basically went over with that intent. And I would, if we could, COP, at this point, I think you and I had briefly talked about if Bill could, and Bill, if you could just give here I am, Bill Nesbitt, here's my background and my view on this ecologic position, and then maybe we can move into, Bill, just jump right in on the experience we had, which was, besides some of the food, it was unbelievably rewarding.
No, that's a great idea. I was last time when we went to have our interview, I was blown away by both your resumes. I mean, to tell you the truth, I mean your background and Mr. Nesbitt with what you did with Olin Rent-A-Car and those type of things. I mean, giving the listeners the experience of wave tops of what you've done to get to where you are now, I think is really vital for any new listeners to listen in. So, by all means, please. Tell the listeners.
That was a fun ride. I'll give you a quick bio because the past really doesn't mean much. But I got out of school and did some nice stuff. And one thing and another, we started a little car rental company in New York City. And we inherited some cars in a garage we bought. And nobody was paying for them. And the judge gave us the cars. And wasn't that wonderful? So we bought a franchise from Olin Mott down in Miami and Olin Rent-A-Car. And in the middle of New York City, we managed to bring that up to about 20,000 cars. And we learned about reservations, and we learned about contracts, and we learned about insurance, and we still survived. We did that for 7 or 8 years, and basically the fleet grew to a size where for a company in New York City, it became not unmanageable, but would have become unprofitable had we not found another use for the cars. So after the season, which is basically 3 months in the summer, we got some locations down in Florida, 4 of them, and we shipped the cars down to Florida, and fortunately our customers sort of went with them. About midway through that, I went to work for Citicorp, for Walter Wriston. The cars were down in Florida with my college roommate. Everything was feeling fine down there. And I decided that maybe I needed a break from that. And within Citicorp, we were with a team that developed the ATM and basically got rid of half the branches and put up kiosks, and were able to actually make some money in the banking business there. Spent 8 years doing that when my family got old enough, and daughter was leaving high school, another daughter was going in, and took that sort of lifestyle break to go back to Florida and join my buds. And the old car rental company became Alamo Rent-A-Car. We basically focused on the leisure market, and we got a very lucky break, and we were able to tell airlines into making us their car rental of record in the United States and then over in Europe. We grew to 100 and some odd locations, and all things being equal, the end of the ride there was 99, and we sold the company to a very nice gentleman who was an entrepreneur, and that was the end of my car rental days. At least I thought so. In there somewhere, I bought a boat company out of Chapter 7, Aquasport. We brought that back and sold it to Irwin Jacobs. And I've done marketing stints for Harley-Davidson dealers and a few other wonderful things. And then Ted called me one day out of the blue and said, how'd you like to go back in the car rental business? And here we are.
Oh, that's excellent. Well, let's
Wait, I'd like to just say Bill plays down a couple of things. He was at a good school, Cornell, and secondly, the gentleman he talked about also, that entrepreneur founded a small company called Waste Management and Blockbuster, and the gentleman's name was Wayne Huizenga, and there was a couple of other consolidations in there. I won't. He has a lot of humility, so I thought I'd pepper that. I would. He went over something. I want the listeners, to understand that when the CEO of Alamo at the time, who was Bill's roommate at Cornell, and he put him there. He basically went and sold Delta, that they could be their car rental company of record. This is a pretty big deal when in a 2-year span they had to be at all of the Delta locations. And if you could even, from a guy who builds businesses, even think about the terror of being told we've got this enormous contract that'll change the company overnight, and by the way, we need to perform in 2 years. And Bill was instrumental in the execution of that scary process, which was to deliver on the promises made by the CEO at the time. So I didn't want him to pass over that. Sometimes he plays it down a bit, but it was quite an accomplishment, and that Delta relationship, I believe, was foundational to the growth and core to the value of of Alamo Car Rental.
I would agree.
In doing that, we also built some ancillary businesses, ostensibly for Delta, but it helped us immensely. We built a thing called Delta Dream Vacations. We started a travel agency and a few other good things to help basically the flow of business and cement the relationship with Delta's customers without really stealing them from Delta. We just sort of borrowed them.
No, that's
it turned out
Bill,
well.
Bill, it's difficult. I'm getting a report back from people who just text me. You got to speak up a little louder. We're getting some. I'm just got some texts in. I didn't mean to interrupt here, but you try to just project into the phone a little more if you could.
Right. I didn't want to shout into this thing. I didn't know how sensitive.
No, shout into it, Bill.
That's, gentlemen. That's. To be honest, that's very impressive backgrounds in what you guys are getting ready to do. Last time you were on the show, you were heading out to China the following day, and you recently just returned. Tell us about that trip, because we're all pretty excited to hear about it.
Well, I would just say, because I want Bill to talk about the car part. And by the way, to the shareholders, we are putting up, much to the chagrin of Mr. Nesbitt, we are putting up a small video clips of Bill in the electric cars, driving the electric cars, and the poor gentleman holding on for dear life. But we have that, and we have some pictures, and we think it gives a feel both of the freshness of this industry, and we're doing it not. If it was some other kind of car cop, we wouldn't be putting up videos or pictures. And I don't just mean that this car was a supercar. I just mean in general the newness, the excitement of these vehicles that are coming online, whether it's from Peugeot, whether it's from Nissan, whether it's from a Chinese auto manufacturer, Indian, American, and obviously we have personally to me, I have a big heart for American cars. So when the electric cars roll off in America, I'm going to probably be the first in line to pick them up. But right now, a lot of the electric cars are being built in the East. And so we did go over there with two purposes, Scott. We went over specifically to meet with a large corporation about strategic financing for fleets and acquisitions. And what we wanted was the bad word, big brother when you're talking about China, but a big brother financial relationship, so that when we went in to talk to a company or secure additional fleet financing, we had letters of guarantee and the bank gravitas, the financial gravitas, that we wouldn't be worrying about the financing, we'd be worrying about the terms of the deal. The second part was to meet with some manufacturers to look at their vehicles and to talk to them about using Ecologic as a marketing vehicle for their cars and entry into America. And I would like to say that if you remember in the last conversation, I talked about how we provide and will provide 6 to 7 test drives per month on a vehicle. Now, that doesn't mean really that much if you're driving a regular vehicle, a GM, an Explorer, Ford Explorer, what have you. It doesn't, it means something in revenue. Don't get me wrong, and it means something to the operator to get those rents per month. But in a new car, one that has not yet had a market, like the Prius 10 years ago, who would have known they'd reach a couple million in sales? It would have been unthought of. But the car rental model allows for these new types of vehicles, people to take a rent and get to know the car without the sales, without a lot of the marketing. Because if you think about it, these vehicles are going to be rented anyway, because that's the purpose of a car rental company. And this is the beauty of our model. We introduce a car, like an electric car, let's say from China or from the U.S. up in Fremont, from Tesla when their prices come down a bit. And next to it is, let's say, a Prius or a flex fuel vehicle, all of them green. But the electric car, why not rent it for the weekend? Now, you would have to have that type of marketing. If you could even think of the cost of marketing to get people to come in your showroom, to look at a car they don't even know the brand name yet. But in our environment, we're able to allow people to try these vehicles in the normal experience of renting a car, as opposed to having the car manufacturer push marketing and try to get people into the showroom, to get them to like the car. That proposition for car manufacturers is extremely, it's an expensive one, and it's a high-risk one. So when we went to China, that was one of our focuses with the car manufacturers, to illustrate for them the proposition, the value proposition, not just buying their cars, but being able to have their cars marketed and getting people in the vehicle and driving their automobiles.
Yeah, that instant ability to give a footprint to a company is huge. I mean, that's a hook, line, and sinker right there with a lot of your marketing concepts. I mean, fascinating concept.
Now, Bill, can you just talk about when you came into China, and then what your thoughts were from the experience all the way from corporate to the driving around the vehicles?
Yeah, let me preface it for a minute with my prejudices. I had never really had much to do with electric vehicles. The hybrids and all that wonderful stuff, great. But the middle American family, the wife determines which car you're ultimately going to buy. And she drives an average of a little less than 50 miles a day, but she doesn't realize she only drives that much. And for me, a viable electric car was going to have to do in excess of 100 miles to give her husband and the family any assurance that the electric car was a viable means of transportation for them. And what I had seen and what I had read in the specifications, we weren't quite getting there in the States. So,
Bill, we're not hearing you. You got to speak up. I'm getting a bunch of emails saying we need to hear Bill.
I'm shouting into this guy here, I'm afraid.
I'm hearing you fine. Go ahead.
But at any rate, I got over there without very high expectations. And we, first of all, the concentration of the Chinese people, the executives and the working people, on their mission is extreme. I won't say they're devoted to it, but they are certainly, that is their primary function, to do their job and do it well and produce a good product. The cars that we saw there, basically, in my judgment, because of what my pre-prejudice was, were exceptional. We got in the car at the Shenzhen airport. It was a cab. It was sitting on the curb. It wasn't prearranged. We got into this thing. It was basically a crossover SUV. It had swallowed our luggage. The two of us were in the back, very comfortable. Our guide was in the front, and, of course, there was the driver. It was a commercial cab. And we were going about 10 minutes. We were talking to our guide companion, and he said, oh, by the way, this is one of our company's electric cars. It just happened to be there by chance. And it was a commercial model of their SUV crossover. It was a cab, amazingly comfortable. It's the middle of the night. The air conditioning is going, the lights are going, and we're doing somewhere between 95 and 100 kilometers. I looked at the dashboard, and I still had 170 miles left on the battery. So I asked the cab driver through our interpreter, how do you like it? How does it work? Do you have any problems? How long does it take to recharge? No problem. The commercial models, because of the charger, recharge in 40 minutes, and they can go for another 180 miles. Perfectly acceptable vehicle, comfortable, the whole 9 yards, and I was sort of blown away by it. When we got to their plant the next day, we saw the present models, the new models, what they could do. It quite obviously was going to be more than sufficient for a normal mid-American family. And they come in both all-electric and hybrid. And the hybrid, the engines, they make everything there themselves, the batteries, the engines, the gasoline engines, and they are absolutely top-tier technology. I don't know how to say it other than that. We have a little way to go here in the States. I'm sure we will. I hope we will. But between hybrid and electric, I think we can make a really good case for giving up some of the gasoline we're using now. I was extremely impressed.
Oh, that's good. I mean, the product quality is what matters most. And if the product quality is that high as you're explaining it, I would assume that their R&D side of their manufacturing company, one of the big target goals is get to 200 miles, get to 220 miles, get to 230 over the years. So, I mean, that's pretty impressive.
Well, I would go, Bill.
No,
go.
I'm saying I asked them about the battery and how long they'd last and all that, and the fellow looked at me and smiled and says, "Oh, we fully expect 20 years, but by then they'll be so much smaller it won't make any difference."
Exactly. What were you going to add there?
I was going to say I really do want to. Again, he underplays his. When I dragged him over there, I think the only reason that I got him on the plane was I got him on business class and he could lie down, because I really believe that there's a misconception about the availability of high quality electric vehicles just because the U.S. has kind of a dearth of these vehicles, and I think. When Bill went over, and we're driving around in a car that's comparable easily to a Toyota RAV or a Ford Escape, and the key is I'm a firm believer, and I don't want to promote my Americanism here in the political environment, but I believe that we are and probably will remain the leaders in research and development. And I think that what the Chinese and Indians and others are doing now with delivering these electric vehicles on mass scale is going to allow the American companies to then say it can work to produce these vehicles. There is an appetite, and my personal belief is in a short matter, the U.S. companies are going to start to deliver a much broader selection of EV vehicles, and you couldn't have to be quite honest, I wouldn't say it's like it was with the racing with the Russians to get to the moon, but it is very important who creates these the battery management system, and who begins to start to develop the leading vehicles that are going to be taking us for the next 50, 75, or 100 years. And I think that the China experience for us really showed that the world is pushing this in a big way, and we can take advantage of it by getting vehicles that are much more manageable by cost, vehicles that people could eventually purchase, and also then start to have a competition to get part of our fleet so that new vehicles can be exposed. And I believe that once we start renting these cars and people see these cars are literally in some ways better, but the same as a combustion engine vehicle, you're going to start to see an increase in sales. Because one of the things that I want to reiterate before we talk a little bit further on China and what that means for our company is that Bill brought up something in Auto Rental News. He left me, I think, in Hong Kong, and it had to do with the fact that the total fleet of electric are really environmentally friendly, including Priuses, in the United States. Bill, if I'm not wrong, it was somewhere shy of 12,000 vehicles, somewhere in that neighborhood.
It was in that neighborhood, and what it was the United States vehicle registrations for either hybrid or alternate or electric vehicles for commercial rental, and it was hovering between 12 and 13,000 for 2011.
Now, why that's important, and this is to the shareholders, why that's important is because this market is wide open. You don't have the competitive landscape, and I talked about last time why. We have an opportunity to be a first mover, lay down the groundwork, build a brand, and at a time, extremely exciting time, where you see this turning, albeit slow turning, but a turning towards a greater adoption of environmentally friendly vehicles. So in a lot of ways, the genie is out of the bottle. We did in China also meet and have conversations with regard to our fleet financing and some loan guarantees, and we've been, which went well, which were a little arduous, but they went well. And we've been asked now to formalize specifics on our proposal. Once we have some clarity with regard to terms and conditions, we will be making that known to the shareholders publicly. Second part of our visits in Hong Kong was as part of meeting with a strategic investor and representatives of a U.S. investment bank, New York Stock Exchange member firm. And we have soft-circled, and I have to use the word soft-circle because over the next week to 10 days, we'll be working towards the formal commitment, which we will be able to announce. We'll be able to announce also the investment bank which will be critical because people have to be saying, COP, okay, this is all nice. How the hell are you going to pay for it? Look at your balance sheet. Well, the reality is we don't need a large balance sheet. If we had a bunch of operations going on in car rental, the balance sheet would be different. But our business was built to go and strategically acquire businesses, integrate our thesis, if you will, and then grow organically and through additional acquisitions. Now, on the financing, our timeline is to get the commitment 7 to 10 days, and then the next, probably within 3 weeks, we're going to have due diligence on site. We're going through due diligence now, and we think our financiers are going to like exactly what we like, and we're bullish. I can't, as the CEO, I mean, it's the chairman of a public company, and Bill would never either sit and say this is a locked up deal, but this isn't our only. We've selected this transaction because it is a debt transaction, which allows us not to have a dilution of our shares, whereas we are going to do it in a capacity of an LBO, and then we're going to start to operate, integrate, prove our concept, and we believe our share price will be reflected quite nicely to go from not zero, about $1 million in revenue up to $70 million in revenue. And then we will go to the street at a much higher valuation and then pay down the debt and seek out and identify the second, third, fourth acquisitions. And I don't know whether I had said this earlier, and I know Bill really beats it with the company. We're very lucky to have a good 2 years locked up with the principals and the owners of ACE, as they will be, the CEO of ACE will be the CEO, the president of our car rental division, and we'll have continuity where hopefully through his management style and with Bill Nesbitt, we'll be able to affect those additional acquisitions.
No, that's excellent. You gave me like 2 different occasions during the last 5 minutes to where I could dig a little bit more and ask you, who you met with, and you closed them up right away. So you're getting really skilled at this. I was like, "There's my shot." Nope, there it goes.
Hey, it's a rich cap. It's a respectful thing. We were very fortunate enough. I would just say that the one company has well over 400,000 employees. These are large, huge companies, and we met with senior management. And the only reason we met with senior management is not because I don't want to be Pollyanna. It's not because we're super people. It's specifically because they bought into this model. And all companies alike, I don't care what the car manufacturer is, the biggest mountain they have to climb, bigger than finding the proper vehicle, is getting the adoption of the consumer, getting the consumer demand, getting them in the cars and getting them driving. And people now are coming to realize the model that we came up with at Ecologic has the capacity to do just that.
Absolutely. Plus, you solve a couple distribution problems that they would have. I mean, you already had the footprint all over the place to where the marketing segmentation is pretty simple. Talk to me about the Shine product.
Well, the Shine product has been. It's very funny. I'm very bullish on waterless car wash because I'm cognizant of the importance of water conservation. Here domestically, we have one of the worst droughts that we've had in, I think, 70 years, and we're seeing the inflationary reaction to that caused by that lack of rainfall. But across the globe, water, and mark these words, it's not just me, mark the words, being prophetic, but water is going to be one of the hottest contested commodities. With regard to our Ecologic Shine operations, I think we've run our route with Park and Fly. where we've proved out what we needed to prove out. We needed to prove, COP, that this kind of new organic biodegradable property could wash vehicles, not scratch them, do it with an extremely minimal amount of water. In fact, it's the average car wash is 80 gallons, and we use 6 ounces, sometimes 4 ounces on average per car. Now, the business growth is going to be in 3 areas for Shine. There's a couple of domestic pilot programs. A release will be coming out. I can't say the name of the company, but I will say it's a well-known chain brand that has gone through the initial product due diligence, and then now is doing pilot programs. We will be announcing that in a co-announcement with this large national footprint company. And then secondly, we have some initiatives back where we were just at, and those initiatives deal with China, and they deal with certain initiatives that the government has on water conservation. And not to, and I'm not comfortable going deep on this, with the exception that Bill and the management, Kyle Withrow, who's been heading the Shine, who happens to be my brother, by the way, heading the Shine business, has looked at presenting this in a entrepreneurial way as well. So it's almost would hit 2 areas, let's say for governments like India and China, who have issues with the environment that are dramatically different than we have here. And they're putting capital behind it, but we are positioning this as a way of dealing with promoting waterless car wash, because the Chinese clean their cars. They clean everything. There's showers everywhere. I mean, it's unbelievable. And secondly, a jobs program, but an entrepreneurial one, kind of like somebody would be pitching franchises. I don't want to be slang about it, but it's very similar proposition that we're making that's been warmly received. It's just at such a stage that if I said anything further, it might be the dynamics might change of how we would approach it. But the initial proposition that I just laid out, where we're promoting it as a way for the municipalities and the state to be involved in promoting entrepreneurial programs where individuals would be able to run their own little businesses. And you're talking about a population. I would probably get in trouble if I talked about the potential numbers and revenue, because you can't, even unless you're over there, come to grips with the amount of people that we're talking about. And you know what's funny is, to put this into perspective, we were talking about, and I guess, Bill, we can talk about this a little. We're discussing with this one entity to do some pilot joint venture programs for ecologic car rentals in a joint venture with another entity to start to develop people's understanding of electric vehicles. They're thinking a lot like we were. And this was already we didn't come to them with this. They brought this to us. In this discussion, they basically literally said, well, we're going to put it in some small outer cities. Some of our, Bill, what did they call it?
The smaller cities, and you asked how many people in the smaller cities, said, 5 to 7 million.
Oh, yeah, no.
5 to 7 million?
They literally, it was 500 to 700 to 1 million people, and these were what they called, to Bill, there was a name. It was a region under 1 million people, and Bill and I are sitting there looking, saying, there's some major cities, states that don't have it, in the United States that don't have 1 million people. So sure. I guess what I'm trying to say, the scale of the Shine potential in China is almost something you can't even get your hands around because it's so large. But I will tell you this: we are going back, and we're going to do test presentations for them, and we have built up the makings of these carts, which will be able to be mobile carts and pushed around and at the malls and so on and so forth. And we're presenting kind of a business that would offer a lot of entrepreneurs the ability to start promoting waterless car wars, earn money, and then also reduce water consumption in China.
I mean, Mr. Withrow, I mean, the reason why I asked you that is because I thought that one was kind of flying under the radar a little bit, and the whole concepts that you have going on with Ace Rent a Car and China and the market and all that. I mean, they're just huge stuff. And when basically when you're thinking potential or actual revenue streams, I mean, what are you targeting? I mean, where are you at?
In the car rental, which is if you said to me, this is why I got Bill to save my behind and come out and head this operation, is because I believe that this car rental thesis, if you will, of Ecologic is probably 300 to 500 million clear in acquisition, but the value meaning we believe we have a clear view right now of 350 million in top end revenue. Now I want to be cognizant. That doesn't mean we're going to have 350 million. There's a lot of stuff that dominoes have to fall. You have to execute. There's a number of things that have to fall, but our goal is in the neighborhood of that 350. And if we're very, very, very lucky and the adoption comes in the way we believe it will, and the growth and broadening of people who are more environmentally cognate, we believe it could organically grow up to that $500 million mark. Now, but I do believe that our value will be more than a normal company. I would like to talk really quick about the Dollar Thrifty recent acquisition. I had always said that they were buying this car company because Hertz is a premium rent-a-car company. And personally, I think Ace is too. That's my opinion on Ace. But Hertz is premium. Sometimes you can spend $40, $50, $60 for a rent-a-car that you might get at a lesser place for $20 less, $25 less. And the reason is they built this extremely pedigree brand. And the same with Avis. Pedigree, just the best of the best, the corporate, so on and so forth. But they're also realizing that the public with the internet and access to information wants a deal. They don't want to, there's this huge appetite growing up for better deals. And so they can't exactly come out with Hertz/cheap auto. They had to do an acquisition, and the owners of Dollar Thrifty, perfect candidate, they needed to buy a company to get into that market that was not that segment that wasn't dilutive to the premium Hertz brand. And they paid, you can look, they paid $2.3 billion. I think the original dialogue before Avis got in was around $1.2 or $1.3 billion. Why I brought that up? The value of Ecologic is fully realized of our goal and strategic plan on these acquisitions. We will be an extremely valuable brand. We will be uniquely positioned, and as I think I explained and I hope I did some confidence, in the last interview, you can't exactly say you're a green rent-a-car company and rent a lot of green cars, but just talking about the benefit of the environmentally friendly vehicle when 95% of your fleet is not. Some call it brand cannibalization, very similar to what Hertz did with Dollar Thrifty. They can't exactly promote cheap vehicles while charging $40 more premium. It's just not something the public buys well. And so we believe at the end of around 3 to maybe 4 years, hopefully closer, we will build up enough brand value and proof of retention of our customers that we will get that higher value that Dollar just got when these larger companies seek to acquire us. And it's only logical. We're not building a company to be acquired, but we're building a company that will be of the ilk, of the quality, of the pedigree that will attract those seeking to own this market space. And if we're the first player in and we're multi-geographic and we're running a good operation and building a good brand, well, then we truly have in front of us the opportunity to build a brand of that would attract the same type, not dollar amount, but the same type of premium that Dollar Thrifty attracted.
Sure. The one thing that just keeps popping in my mind when you're doing a lot of these negotiations and certain things that you're doing in China, and I know there's reasons for not telling the public exactly who, what, when, and where, and you gave us the why, but I would expect that some of that, the potential of having exclusivity, if you will, could potentially just be something absolutely huge. Especially if the car market takes off or that particular product and those type of things. And then the second tier to that, or the why in the road, 12 to 18 months down the road, I would expect other country manufacturers to be, biting in at the bit, if you will, to basically utilize that marketing technique and what you did. I mean, that's it. Where do you see yourself in 12 to 18 months? Let's try that.
I think Bill, comfortably, you know what, I would, because I talk too much, and Bill, I want to make that known. Bill is a cop, is a serious operator. He understands the business down to the paint and the cost of the paint in the parking garage, and he understands fleets and fleet management. So, Bill, and you're now, we do have it a little easy because we're such fans. We're huge fans of the principles of ACE. But Bill, what would you say at the end of 18 months?
We will have, basically our game plan on paper is to make a number of acquisitions, and we should be able to be running about 5,200 cars at the end of that time. And if we combine, as we do, our rental revenue and our vehicle sales, will be north of 150 million.
Wow, it's amazing. And like with anything else, when you're trying to predict the future, that expansion can even go beyond that once you're looking at the milestones and gates that you set based off your business plan. It's pretty. Go ahead.
Yeah, here's some good news. We announced the LOI, and people started calling up our good guys over there at ACE, and ACE has marketing affiliate companies that they supply reservations to through their marketing system and their reservation system, which is very robust and very scalable. And people started calling up the principal of ACE and saying, "Oh, wow, what a great idea. Do you think they'd like us to join?" So we do have a very positive interest, and we have industry companies, independent operators who see the wisdom in this and see the future in it. So I'm very positive that we can get this thing done. We can select good companies to partner with, and that our people in the industry will accept it and run with it and treat it very well.
No,
and we believe the management between Bill and the two gentlemen, and I don't want to leave out their CFO and controller, but we believe that they can scale and handle the scale, and they're excited to do so. The only time we start to get into, we have had some recent propositions from a number of, actually 6 operations down in Brazil, and one operation that operates headquartered out of England, that is in Milan, at 12 airports in the UK, and 25 locations in Mexico, that also is interested in the ecologic position. We do believe that the Brazilian operations, again, this would be more for the guys, the principals at ACE, soon to be Ecologic ACE, and Bill Nesbitt to deem whether these are targets worthy of acquiring. But from me and my, which I use that example, P.T. Barnum nature, to have the opportunity to be positioned with a brand anywhere in the vicinity of the World Cup and then 2 years later the Olympics is an opportunity that a promoter like myself has a hard time passing up. And so we have been approached, as Bill said, and we're much more comfortable with the relationships that come through the ACE principles. The guys are stand-up, and we think they obviously made good choices. You look at their operating history, and but there are some marketing opportunities that have come up that tend to we're looking at them in a serious fashion. It would change some of the revenue dynamics, as would the relationship if we were to effectively go into a joint venture and operate in those quote-unquote small cities or regional cities in China. You could see the revenue triple. Now, there's a lot of, I want to be cognizant. We're a public company. I don't want to be promoting and stuff, but I would say, COP, that with what we have on the table right now, it's not sad, but it's kind of annoying to see where people talk to us and say, well, guys, you're doing this, or your stock is this, and we know what's in the barrel, what the powder that we have, and it's a little frustrating, but I think that as we execute, we deliver and execute with ACE, and we take that platform, and I want to be cognizant of something here too. Consolidations and roll-ups are not easy. Human relation, a part of integrations, is tedious and tenuous, and sometimes can run afoul. And usually a lot of arrogance. The street is littered with a lot of arrogant financiers who go in and think they can just start buying up different businesses, regionally different businesses, culturally different businesses, and come out with a success because the books say one thing in the numbers, and that's just not the reality. The reality is humans run businesses, customers keep these businesses alive, attrition is always around the door. To execute and make this integration 100% green is not going to happen with a flick of a beck. It's going to happen with a lot of skill, a lot of acumen, a lot of management skill, and we are not overlooking and saying, let's just act like this has already been effected. We have a huge handful in front of us, an exciting little mountain to get over with the ACE team, and that is to start to bring in these vehicles and reposition and educate their customers. And you don't do it by just slamming people over the head and telling them, look, we're green now, and that's the way it is. It's just not the way the world works. And so I don't want to let shareholders or anybody listening think that Bill or I or the management at ACE or our directors believe that this is a throwaway, meaning it's like turnkey. It's not. It's going to be a lot of hard work, and we believe that there's going to be some communication and some challenges along the way, but we're quite confident in the team that's together that we can effectively work our way through this, utilize this as a platform, just go in and look. We don't know the financials of the companies that we do know. The one big player is a player around $100 million, and we do believe that those financials are most likely in order for a gap. But there are the smaller regional, the San Diego, the Vegas, the San Francisco, and so on and so forth. These operations that might have $5 million and $2 million and $10 million, respectively. You have to get in there, and Bill goes in and does what Bill does and charm them and look at his books and It's not an easy It's not anybody who thinks that this is easy. That's an ignorant thought. It's anything but easy, but it's attainable, and the end of the tunnel, if you will, is the fact that we could have the chance to really build a brand. You know, I said this last time. I'll say it again. If you took all the rent-a-car companies and you stripped them of their brands, I'm talking Enterprise, Budget, everybody, besides maybe Enterprise that has this huge business in insurance replacement. That's what happens when you go break your car and take it in, and they get you to take a rent-a-car. Besides that part of their business, and some of the people who rent cars for $4 a day, I'm being facetious, but the low bottom guys, where you take your life, you're not only getting car insurance, you're getting health insurance with the rental. You strip them all down, and these car rental companies are ubiquitous and interoperable, which means they're commodities. And if it wasn't for the brand and the brand recognition of Hertz, of Avis, of Enterprise, and the relationships they've developed, they're all the same business. Well, look, now do that same thing. Strip the Ecologic name off our business, and guess what? We stand out. We have a reason to be there. We stand out. We're different. We have a fleet that is different. You take our name off, and you put every company up. If you figure a huge, big football field, guess what? We stand out. And that in marketing and for a marketeer is utopia. You don't get to do this that often. You don't get the opportunity to separate from the crowd, give great customer service, deliver, on your promises, and differentiate and grow and be true to your brand. And if we do all those things, we will be rewarded. And I happen to believe, and I'm glad that Bill's on here, and I know I talk a lot more than him, but Bill can and has been part of a growth spurt that we're talking about. He's got the acumen, he has the chops, he's seasoned, and I don't mean that in a negative way, because in executing this, we need a rational guy who's been there, he's seen this stuff, he knows car rental, he knows automotive, he knows finance, and if you're ever lucky enough, and I feel so fortunate that he decided to come out of retirement consulting and take this job on full time, I feel that even though the stuff I put out in front of you, I don't want you to take lightly, because it's not going to be snap, crackle, pop to execute. But I believe in Nesbitt, and I couldn't be more happy that he's in for the long haul.
That's excellent.
Let me get a word in edgewise about this, the ability to brand and the ability to change a culture. And the culture we're trying to change is the culture and acceptance of the customer. The customer has to believe that a ecologically sound vehicle will be perfectly adequate, safe, and get them where they want to go, plus save them money while they're getting there. When we decided to go with the ATM experiment at Citicorp, it was a cultural change, because we had to take the average guy who gets a paycheck every Friday or every other Friday in the New York area and say, guy, you don't need a paycheck anymore. It will appear in your bank account. You don't have to stand in line, and you can get your money anytime you want, 24/7. So we had to change a culture there. Mm-hmm. When we formed Alamo and we got the marching orders from Delta to march across the country, one of the things we had, because we're a private country, we're a limited liability company all the way through, we had a culture. And the culture was we knew how to service, and we knew how to sell, and we knew how to promote ourselves to the vacationer, the retail traveler. And as we went across the country, we basically dug down into our ranks of people at existing rental stations, and they became the people who went out and ran the new ones. And they kept the culture alive. Without that, we could not have met the Delta customers and the Delta mandate at that time. The people we're dealing with at ACE, they've won J.D. Powers for best perceived car rental in the United States by the customers. They have a culture. And when I was talking to the guys the other day, we were discussing this. And I said, Dick, how do you maintain your culture? He said, well, actually, we monitor culture just like we monitor mileage and credit and cars. He said, because I find when I have been a little remiss and the culture and the energy has dropped down, I can look at our bottom line and it does exactly the same thing. So I monitor culture. We go out there and cheerlead. That's how we keep the business going. So I'm very, very much optimistic about the fact that we have partners that can make the culture what we need it to be and maintain it and grow it as we grow.
Yeah, it's got to be unbelievably exciting to take on challenges like that and then execute them. There's not much better than that in business.
No, well, and winning is the only thing we're in here for. Going to make it happen.
That's awesome. The if I remember correctly, you had a website that you mentioned last time. What is your website?
www.ecologictransportation.com. Ecologic is ECOLOGIC and then transportation.com. We will be putting up after the holiday so people can see Bill in the electric car and some of the vehicles. I'm going to get a little permission. The electric car we won't have to have permission because you're in the inside of it, but I'll get permission and put that up so people can see it. There was one thing I needed to tell the shareholders that people wanted to know, and I know this is getting a little long in the tooth, but people wanted to know what this. We spun out Ecologic Systems. We put out a release, an 8K, and for God's sakes, I think we've done 3 amended 8Ks. Because it was somewhat complex and such. And the company, I want to give this specifically, so what this means to Ecologic shareholders. This isn't a future for shareholders buying, but shareholders who as of the closing date of the acquisition, are going to be part of a distribution of 3% of Amazonas Florestal. And Amazonas Florestal is in the process of starting to trade and make a market. It does have its symbol up. I want people to know it's an AZFL, and the company AmazonasFlorestal.com. So Amazonas is like Amazon and AS. Amazonas, and then Florestal, FLORESTAL. If I hacked up that name, I want you to, if you could, just OTC markets, put in AZFL. And the reason we did this was really as a gift to the shareholders who stuck by us. I wish I could name a bunch of you, the guys who call, who have stuck by us. It's meant a lot because we obviously, in any path you walk through some puddles, and we did, and a lot of our shareholders stuck in there. And what we wanted to do was bring and transfer some value, and our Ecologic Systems play, which you guys can see up on the website. It was, to put it bluntly, a high-minded thesis that I came up with at the origination of this. It still has, value in its thesis, but the reality was it distracted from renting green cars and building a brand. So what we did was I merged the company in a sustainable forest management company headquartered in Miami, Florida, with its land holdings and timber operations in the state of Amazonas in Brazil. And it's sustainable forest management. It's a green company run by a really exciting young CEO by the name of Michael Ibar, very competent CEO. And we believe that the 3% distribution, now the assets on the books of the company, which have been filed, are right around $46 million in real assets, in the audited value of the forest, which is around 110,000 acres. So it's not a small property, huge actually. So that 46 million in value, if you take 3% of the 46 million in value, I normally would make a haircut, but just for academics, and I'm not saying this is the value, but it's around $1.38 million. The value of Ecologic Systems on the books at the time of the merger was $2,400. Now, there was some expenses and capital expense that went into the company. We paid some lawyers. We did some work. But the reality is nowhere near the value that the shareholders are receiving in the 1.38 million shares. I did want to make this clear, because a lot of people thought, well, is it dilutive? What happened? When are we, is it diluting the stock? The reality is it's not dilutive at all. The company is going to file an S1 registration. We did give them before the end of this year. They were fast tracking it. And like anything else, they're going through. They're just setting up the timber, some sales. They have a big UK customer, and they're knee deep in their business. So we did give them towards the end of the year. Their goal is to have it before Thanksgiving. What they're going to do is file a registration. We will let our shareholders know. They'll be able to go online and look at that registration, and that registration is basically registering the shares that are going to be distributed once they're registered. Our company is going to distribute those to the shareholders of Ecologic. Now, I would like to this is important. I would like to let it known too that I own of Ecologic. I should know how much I own, but I own about 17 or 18%, and maybe a little more when I'm going to convert most of the rest of my debt. I'm not going to be part of that distribution. So the shares, the 3% of the shares that are being distributed to the shareholders of record as of the date of the closing, I wish I had it, I should have it, but as of the date of the closing, included me, obviously. All my shares, by the way, are in cert form and at our attorneys. They've never even been put into a stock count. But I will not. I'm what's called excluding myself, which will be in the registration. So I'm excluding myself and my wife, who owns 1 million shares of this company. I'm excluding her from that distribution, so it will increase the amount that people receive. And it's truly we wanted to do it, especially for the shareholders who have stuck by us during the leaner times.
No, that's awesome. I'm sure that's probably greatly appreciated by many and all. It's a lot of great stuff, guys. It's just amazing ventures that you're doing, and the potential and all of those things. And you set up a couple things that are very profound. And when you talked about the market and those type of things, and the market predicts the price, and all you can do, like in anything else in business, is you build your business plan, you execute accordingly, set your milestones and gates, and you charge forward, and the value of the company increases based off assets and bottom line, and then the ROI, and shareholders and bigger investors come to the stock from that perspective, and all will be in balance one day. I know it's like you said, it's frustrating sometimes to look at it for what it is, but just keep charging along and do exactly what you say you're going to do, and all that takes care of itself.
Well, and Cop, I would want to comment right now on, we've had some frustration. Me as a CEO, you look at this almost as a child, and someone just took his shirt when they sell stock. But the reality is this. People buy stock, people can sell stock, and people, if they do it with their own money, can do whatever the heck they want as long as it's legal. Now, yes, I could be a whining CEO and sometimes, a whining chairman, and I could Bill doesn't whine like I do, but I do whine a little bit, and it pisses me off. I think, I see our stock getting shorted. The other day, I think there was 67,000 shares out of 90,000 or 98,000 were shorts, and people don't know that. You can't run out. But I also don't want to be one of these, again, whiny guys, because people have a right to sell, people have a right to buy, and we'll never tell them either. I won't tell people not to sell, and I'll never tell people to buy. It's not my job to do either. It's Bill and I's job as faces to tell what we plan to do, report on whether we did it, and as you just said, rightfully so, markets place the value on your stock. So as we execute, we communicate, the stock price will be priced where the market believes it should be. And though it is frustrating, and I appreciate you noting that, I know that Bill and I both get frustrated, mainly for our investors. We're in this for the long haul. Like I said, we not only, I will never sell a share of stock of this company until I sell the company. It's been my motto since day one. But I do get pissed. I get pissed because I know people that buy the stock. I have friends and family who bought at much higher prices. Believe it or not, I have people who I know who have bought the stock over $2, who've bought it over $1. And there's some very loyal people who still haven't sold. And those that have, I feel nothing against them. It's difficult for us to know what we have and not have it reflected in the stock. But I think that's part of every CEO and every chairman and every board of a public company. They think their stock ought to be higher. And I think that's just, as Mark Twain said, we all think we're probably a little prettier than we are. So we hope that Bill and I and the team execute, fully execute the way that we hope to and the way that we've outlined here. And we hope then our stock price is reflected as we think it should be.
That's great stuff. Well, gentlemen, we've covered a lot of information tonight, and I'm sure the listeners and your shareholders and potential investors are pretty excited over where you're going. And I personally want to thank both of you for taking time out of your busy day to be with us, and welcome you back anytime in the future. I'm probably on your next trip to China, because I'm sure that one's going to come back with all kinds of names that you're going to be able to give me. And that would be awesome.
Well, we look forward to it, Bill, and definitely we look forward to going back to China, right?
It should be interesting. This business and where we're at now is really interesting, and by making it multinational, we get a lot more out of it, and we give a lot more to our customers and our shareholders. So I look forward to growing this thing and seeing it come to fruition.
All right, gentlemen, it's been a pleasure.
Thank you.
Okay, thank you very much.
That was Mr. Bill Nesbitt, President and CEO, and Mr. Edward Withrow III, Founder and Chairman of the Board of Ecologic Transportation, Inc., stock ticker EGCT. Man, guys, I mean, I want that company to come on every 3 months. I mean, you're going to see some huge trends over time with all the different things that they're doing, especially from the marketing aspect and developing a footprint. You know what I mean?
Great stuff. Excellent job.
I mean, they're two dynamic individuals. I know Edward's volume piece was perfect, and Bill's was off just a little bit. So hopefully that comes out clean from that aspect. But they both said some very key and vital things throughout the interview, and interesting enough, a lot of the dollar values and figures that they were throwing around were not small. And then, the whole, creating Alamo. I mean, come on. These guys have been there. They know what they're doing. And, the challenge of, changing a culture is always it's a big one. It's a huge obstacle to overcome. And, they got a good plan to actually do it. So it should be interesting. Well, looking forward to the next one on another night, gentlemen.
Good job. Well, I'm looking forward to wrapping up another exciting week. Be sure to check us out in the morning. We're going to have another fun day. And if you're not with us tomorrow, be sure to have a good holiday weekend and have a stay safe out there. Thanks for tuning in.
Thank you for listening to Stock Traders Talk Radio. All views and topics talked about on Stock Traders Talk Radio is solely for entertainment purposes. We are not professional financial advisors and always recommend you seek the advice of a professional financial advisor. Never invest in any stock featured on our show unless you can afford to lose your entire investment. The information contained on our show is based on sources which we believe to be reliable, but is not guaranteed by us as being accurate, and might not be a complete statement or summary of the available data. Stock Traders Talk Radio advises that the investments in companies profiled are commonly considered to be high risk, and use of the information provided is at the investor's sole risk. Thank you for listening to Stock Traders Talk Radio.